Hey, how's it going everyone? So I just wanted to give you a quick recap of what we saw today within the markets and the reason why I personally didn't place any trades. So the reason number one is due to the fact that we had a US bank holiday. So if I just go ahead and show you what we had in terms of today's news. If I recap back to that, as you can see, we had USD bank holiday here. So I wasn't interested in trading because based on my backtesting data, it says that if I trade US bank holidays or pound bank holidays, then I'm more likely to lose than I am win. So simply avoid trading days in terms of that. So already to start the day, I wasn't going to be trading in the live markets. I was still on call with all of the community within the Discord. We were still there as a team. We were just building backtesting data, having a good catch up and a general chit chat. But basically, if you were to go ahead and trade today, I wanted to show you what would have happened and the reason as to why with my personal AMD strategy, I don't go ahead and trade on US bank holidays. So first of all, for NZD, which is one of the pairs that I trade, this wasn't a valid accumulation session. Now, reason being, if you don't understand accumulation sessions, I've explained them in my other videos, but essentially the reason being is because the last candlestick here was the high of the session. So if the first or last candlestick are the low or high of the session, it simply invalidates that as an accumulation session. So essentially, I just disregarded this and I wasn't interested in trading this pair at all. If I was to be trading on the markets, obviously, as I mentioned, I wasn't because of that bank holiday. I was still looking at what was happening in the markets. Now, as you can see on this was a valid accumulation session. Reason being, the low wasn't the first candlestick, the high wasn't the first candlestick, and then vice versa for the end of the session. So the low or the high wasn't formed by the last candlestick. As you can see, we had a high that formed here and we had a low that formed here, and then we had sort of like a choppy sideways price action here. But essentially what I was then looking for is a liquidity sweep to the upside. So if I go ahead and play this, as you can see, this is our liquidity sweep. So if I mark out our point of liquidity, this wasn't because it didn't break above, it didn't actually take out the liquidity level here. However, this here has taken out the liquidity. So this is what I'm looking at as my sweep. I'm then looking at a change of character to the downside. So I want a candle body closure through our previous predominant low left in the market. So as you can see, if we allow this to play through, there you go, it plotted the chotch just underneath there, and that's obviously an automated chotch with the Samurai plug and play indicator that I use on a day-to-day basis to trade in the markets. Why? Because this was my manual strategy now coded into an algorithm that I can easily implement and view without having to do any of the hard and detailed analysis. And we then obviously provide this to our members, trade it every day within the community with everybody as well. But essentially what happened then was there was my entry. So we made a change of character and we retested that change of character on the candle after. As you can see, the chotch came through here with the candle body on this candle. We then retested that zone. So here was my entry at 8:15 a.m. and then I was targeting the opposing side of liquidity like so, and targeting that liquidity with a stop loss on the previous predominant high. So that was the high that formed our sweep, as you can see there. And then literally there was a 1.21R and we played out the trade. Very interesting what happened. So we came down initially and we had somewhat volume in the markets. This was like a 20-minute price action that happened here. We then pulled all the way back to an entry, choppy sideways movement into drawdown, choppy sideways movement again, and then eventually a stop loss hit. So this would have been a losing day, and I avoided this loss simply because I don't trade the markets when it is a bank holiday. It's very, very simple, and that's how I was able to save myself having a negative R on my accounts. But essentially, if you look at what happened here, is this trade opened at 8:15 a.m. and it didn't close until around 2:40 p.m. Most of our trades are around sort of 30 minutes to 3 hours at most. As you can see, this trade was essentially held from right early in the morning at 8 o'clock, and then it was held all the way through right until mid to late afternoon. And it's just not ideal market conditions. Like, you don't want to be sat checking your phone constantly throughout the day to see if you're still in a trade or what's going on, etc. You know, you just want to place your position. You want your limits to be set. You want your alerts to be set. You then want to walk away from the markets and see if your trade hits a take profit or stop loss within a reasonable time. Personally, that's just my take on day trading and how I like to view the markets when I am day trading. I don't like to be sat in a trade all through the day, holding it overnight, holding it for several days on end. Like, if I'm intraday trading, I want to be in and out within several hours. So this just shows you that you have a decrease in volume on the US bank holidays and pound bank holidays. If I'm trading these pairs, I don't want to be entering the markets on those. The reason why I'm interested in those over other sort of bank holidays, and the reason why, you know, I would still trade an Italian bank holiday, I'd still trade a French, German bank holiday, for example, I would allow those days, is because they don't bring that large institutional volume and money into the markets for me to go ahead and extract a profit. So those sessions don't impact it as much, so I'll trade those bank holidays. However, the pound and the dollar markets, they bring a lot of volume, they bring a lot of volatility, they bring the directional bias that I want in order to actually enter a trade. So by not having that in place on a certain day from one or the other or both, I don't want to trade it. It's improbable market conditions and I simply avoid it. So yeah, as you can see here, we didn't have any trade on NU simply because there was no accumulation session. However, if you look on EU, this was a valid trade, but it went and hit a stop loss. So no trades for me for the day. Very, very simple. On to tomorrow.